We see stocks down for the day, 20-year bonds up about 0.5%. Same with gold. Let's jump first into the S&P 500. We have so far 2 days into the week. We have a red open box candle. Again, that means some slowing. It's not a strong, solid red down candle, but down both days. Now down on Monday and down on Tuesday. Again, Tuesday just 0.09%. But we still have a red open box candle forming, and of course you look at strength, it's not even pushed up as high as the prior week had. So some slowing there. Price percent oscillator still going up, but again, not super strong. Derivative oscillator gaining some upward momentum, but that's from the 3 prior weeks of momentum that's still spinning out. Now, as we go a little deeper into things, let's look at the 2-day candle. Again, what we really see happening on the 2-day candle is a sideways slide. We had the prior 2-day candle on Friday. That finished up as a green spinning top, indecision tending up. And of course, this latest 2-day candle did finish forming, and it's almost a red doji. So again, lots of indecision, tending down, derivative oscillator losing upward momentum. Price percent oscillator still heading up, but slouching a little bit. Maybe that's a good word to use. On the 4-hour chart, what do we see there? Really a sideways slide throughout the day, tending down there at the end of the day. Like we said, 0.9% down. So we see the 4-hour price percent oscillator still heading down, derivative oscillator on that same timeline heading down. Also, what we're waiting for is a crossover going up, if indeed that occurs. Did the market bottom somewhere around the 262.62 mark? It's possible. We'll see if that gets tested and tried, if it bounces off of that, and if it continues its up march. Just don't know what's going to happen there. We'll continue to watch and see what we see. We're hoping to hop into a trade going up after we had the weekly vertical crossover going up, but it hasn't happened yet. Remember, we follow the trends. We don't make the trends, we follow them. You think you make a trend, you're going to lose, and lose big. What do we see going on in the NASDAQ 100? The tech stocks is depicted by QQQ, the ETF that tracks the NASDAQ 100. We see so far the week a red open box candle, little wick on the bottom, wick on top. Of course, indecision tending down, derivative oscillator still gaining upward momentum. That price percent oscillator has weakened quite a bit. We'll just continue to watch. We're still in a confirmed up move on that weekly chart, and we'll see if that prior strength is going to show itself sometime this week. We have a red down candle on that 2-day chart, a much bigger red down candle than the S&P 500. We see the derivative oscillator has been losing momentum since it peaked out on the 2-day chart back on Friday the 18th. And the price percent oscillator is pretty much flat. Again, when we look at where things have gone, though, from where things started moving up on the 2-day candle on last Friday the 18th, what we actually see happening, and again, that's Friday more than a week ago, the prior Friday. What we see happening is price movement has not moved below that. So we'll see if there's a bottom somewhere. As we tune into the 4-hour chart, we see things continuing to peg down. I guess the low point in the morning, somewhere around 161, finished up the day higher than that, but don't know if there's going to be a recovery there. And we'll just sort of see where things stop. And if we do have a crossover going up before that 2-day chart rotates over going down, might be able to jump into that weekly vertical crossover. So we'll wait and see what there is to see, my friends. Let's go from stocks to bonds. Bonds up for the day, 0.51%. We still are in an up move on the weekly chart. We're waiting to be able to redraw that weekly trend line. Maybe we'll be able to do that accurately somehow at some point. We have a green spinning top, meaning indecision tending up. We can see the price percent oscillators trying to head up, derivative oscillator continuing to lose upward momentum. We look at the 2-day chart. It's still confirmed down, although the last 3 candles, 6 days of movement, are up. This latest candle, though, didn't rival the top that things hit prior. And is that 200 moving average going to be a ceiling, or are we going to push through it? We'll watch, wait and see. Derivative oscillators losing downward momentum. Price percent oscillator still heading down, just about flat, but still in a downward trajectory. We'll wait and see what we see there. 4-hour chart. What do we see mostly? A sideways slide. Up a little at the end of the day, down in the morning, but it did end up the day 0.51%. So just waiting to see if that 2-day chart rotates over going up. Might give us some opportunities in the future. Don't have any right now on bonds. Lastly, we go to gold. Gold up 0.56% for the day. Gold's in a confirmed up move on the weekly chart. And again, so far this week, nice up candle. Derivative oscillator still losing upward momentum, but that price percent oscillator is heading up. We look at the 2-day chart, and what do we have? We actually have a crossover going up at the end of that 2-day candle because it's a nice big up candle. Had enough momentum to rotate things over for us, which is sweet. So what we have now is a crossover. Would like to see the derivative oscillator in the green. It is not green yet, which doesn't necessarily give us supreme confidence in the fact that things will continue going up in gold. We like to have enough momentum on the derivative oscillator for it to flip over going up at the same or in the same direction regardless as the price percent oscillator, but we do make the call based on the price percent oscillator, so we do have that going up on the 2-day chart. Now that allows us what? The possibility of getting into an up move in gold after we have a pullback, that is a movement in the opposite direction on the 4-hour chart from this up move, so that we're able to jump into a movement going up. And we'll see if indeed that occurs. We don't have a pullback going on at this time. We have things moving up quite nicely in gold, like we set up 0.56% for the day. So we continue to keep our eyes on gold and see how that shapes up. We'll keep you posted throughout the course of the week. But we are now in a position to potentially jump into an up move in gold when the opportunity presents itself. You want to know more about what we do at the program? Of course, you can buy the book. It is available. We ship them out all the time. We're in the 8th printing of Charting Your Way to Wealth. You'll see a link in the show notes, whether you're listening to us on YouTube, you've subscribed at the channel, you'll see in the show notes that came with your email. And of course, we encourage you to subscribe. That's the quickest, best way we can get things out to you. And of course, it's absolutely free. You'll also see links there to our 3 free PDFs, your daily market worksheet, weekly market worksheet, and trade worksheet. If you want to supercharge your training, you'll be filling those out when you do a practice trade, every day when you listen to the program, and of course once a week when you listen to the comprehensive review and forecast. You have questions, problems, concerns, we're happy to hear from you. We appreciate all of our Patreon supporters. We do need to hear from our Patreon supporters what stocks and ETFs you would like us to review for you this week. We do have a special program coming out for our Patreon supporters. You want the special information we have, from the quarterly chart trainings to the short chart trainings to the monthly special training that we have where we review your favorite stocks and ETFs. Of course, that initial Patreon entry level will get you that. And of course, the intermediate level will get you a free book. And we're always happy to help you in any way. Feel free to write us, cw@chartingwealth.com. God bless, all the best from the whole team here at Charting Wealth World Headquarters.